You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Hey there, curious minds. Welcome to the Deep Dive, your shortcut to understanding a complex world. Today, we're diving deep into a fascinating stack of sources, a comprehensive global markets and geopolitical briefing that's absolutely buzzing with interconnected developments. Our mission is to help you cut through the noise, spot those aha moments, and truly grasp what's driving the headlines. Think of it as your insider's guide to the intricate dance between global finance, trade, and the ever-shifting landscape of international relations. We're going to pull out the most important nuggets, connect the dots you might not see, and show you why these seemingly disparate events are far more intertwined than they appear.
Absolutely. And what's truly fascinating here is how interwoven areas like, currency movements, commodity prices, trade disputes, and geopolitical tensions actually are. This briefing gives us a sharp snapshot of a highly dynamic global environment, and we'll explore not just what's happening, but the underlying forces driving these significant shifts.
Okay, let's unpack this, starting with the currency markets, because they really tell a story about global confidence and risk. Our briefing highlights the dollar trading firmly after the U.S. holiday. So what's underpinning that surprising strength, especially when there's so much global uncertainty?
Well, the dollar's firmness is largely a reflection of selling pressure on other major currencies, particularly sterling and the yen. But what's genuinely a puzzle and a key insight from our sources is that the euro has slipped back onto a 1.16 handle. That's $1.16 for every euro, as traders say. And this is despite eurozone inflation showing a slight uptick to 2.1%. And the supercore measure, which strips out volatile components, is steady at 2.3%. This really raises an important question. Why isn't that inflation data giving the euro more support? It seems counterintuitive.
It absolutely does seem counterintuitive. So the market isn't buying into this inflation as a sign of, underlying strength.
Exactly. It suggests the market thinks the European Central Bank might stay cautious. Or perhaps there's just a broader vulnerability to, external shocks like conflicts and energy issues. It implies investors might see these inflation numbers as potentially transient, not reflecting robust, sustainable growth.
That makes a lot of sense. So fundamental concerns are outweighing that positive data point. And speaking of weakness, the yen seems to be under particular pressure. What's specifically driving its struggle, even with talk of rate hikes from the Bank of Japan?
Right. The yen's weakness is a confluence of factors. While Bank of Japan Deputy Governor Himino did reiterate the case for further rate hikes, he also acknowledged high uncertainty, global economy, trade policy, but more immediately impacting the currency, we're seeing significant political instability. Senior members of Japan's ruling party reportedly set to resign.
Ah, okay. Domestic turmoil.
Precisely. That kind of thing often spooks international investors, leading them to pull funds out, which weakens the currency. So you have the central bank hinting at tightening, but these global concerns and domestic politics are just overriding that potential support.
Gotcha. And it's not just the yen, right? Our sources indicate sterling has also taken quite a hit. What's the story there?
Yeah, sterling has come under heavy selling pressure. This is largely due to building concerns around the UK's fiscal outlook and the government's upcoming autumn budget plans. The cable, which is the GBP USD rate, it dropped through 1.35 and even briefly hit a 1.33 handle.
Wow, that's significant.
It is. It's not just a slight dip. It reflects real investor apprehension about the UK's financial stability and how the government plans to manage things. When confidence dips, the currency usually feels it.
Are other currencies feeling similar pressures, or is the dollar's strength more about these specific weaknesses elsewhere?
It's a bit of a mix. Antipodean currencies, like the Aussie and Kiwi dollars, they remain softer against the US dollar, often tied to commodities and China's economy. On the other hand, the People's Bank of China has continued to set a firmer yuan fix, so they're actively managing its stability.
Okay.
So it's a varied landscape, but the overarching theme is definitely the dollar in the driver's seat, benefiting from a flight to safety and these concerns elsewhere.
And for you listening, understanding these currency shifts is crucial because they directly impact everything from, well, the cost of imports, your purchasing power, to export competitiveness, and even your travel budget. Shifting gears now, let's talk commodities. This is where things get truly counterintuitive, I think. Our briefing notes crude oil edging higher despite a stronger dollar and broader risk aversion. Normally, that stronger dollar dampens demand, right? So what's going on?
That's precisely the right question, and the answer seems pretty clear. Escalating geopolitical risks. They're creating a significant risk premium in oil prices. The gains in crude are directly underpinned by intensified Israeli strikes on Gaza and, of course, the ongoing conflict in Ukraine.
Ah, the fear premium.
Exactly. In times of severe instability, the market prices in potential supply disruptions, even if they haven't actually happened yet, and it's currently powerful enough to defy that strong dollar.
And how are precious metals reacting? Gold, silver, are they getting that same safe haven boost?
Spot gold certainly is. True to its safe haven nature, it actually set a fresh record high above $3,500 an ounce before easing back just slightly. Any losses were quickly cushioned by that persistent safe haven demand we see when geopolitical risks spike like this.
Makes sense.
Silver has pulled back a bit after some strong gains, while base metals are mostly weaker. That's the dollar strength effect we talked about. Copper, though, remains stubbornly range-bound, so it indicates a nuanced picture. While the broader market feels the dollar strength, the demand for gold specifically, as that ultimate safe haven, is very potent right now, a clear signal of anxiety.
Turning to energy more broadly, there are some significant developments regarding gas, particularly around Russian supply. What's unfolding there?
Well, the European Union is actively working to close loopholes ahead of its planned 2027 ban on Russian gas. That's a major policy push. Simultaneously, and this is really a critical strategic development, Gazprom confirmed a long-term gas supply agreement with China, the Power of Siberia 2 project.
That's huge. A real pivot eastward for Russia. It's massive. It clearly shows Russia solidifying its energy exports towards Asia in response to Western sanctions. Think about it. A few years ago, this scenario would have seemed almost unbelievable. It fundamentally redraws the energy map. Additionally, we're seeing Russian oil product loadings from the Black Sea port of Tuapse set to rise in September. And Shell announced a major turnaround at its Pernis refinery later this month, which could temporarily impact European supply.
So what's the practical takeaway here for you, the listener? Beyond headlines, how do these commodity trends affect, say, everyday life or global stability?
Well, directly, these trends impact global energy prices, feeding into inflation in your household budget, but it's much more than that. These long-term gas deals, the shifts in oil flows, they reflect deeper geopolitical realignments. They signal fundamental changes in global supply chains, energy security for whole continents, and frankly, the balance of economic power. Europe banning Russian gas means more reliance on other sources like LNG, which has global ripple effects on pricing and availability. It's all connected. Okay, next up, the trade landscape. Some fascinating developments here, especially regarding tariffs. Our briefing mentions U.S. Treasury Secretary Bessent. What's the latest on his stance?
Right. Secretary Bessent made a significant statement. He said he will file a brief to defend President Trump's tariffs at the Supreme Court, and he expressed confidence they'll be upheld. This indicates a strong commitment to existing trade protectionist measures from the current administration. It's quite a political dynamic, isn't it?
It really is. One administration defending the signature policy of a predecessor suggests a kind of bipartisan consensus, maybe?
Yeah.
Or political necessity.
Possibly both. It signals these tariffs aren't just going to vanish quietly.
And he also made some pretty pointed accusations regarding Russia's war effort, didn't he?
He certainly did. Bessent accused China and India of fueling Russia's war effort, and he stated Washington is making progress with Europe on pressuring India over Russian oil purchases. This really highlights that intense intersection of trade policy, broader geopolitics, and sanctions enforcement. It shows the U.S. trying to leverage economic influence for strategic goals.
How are other nations reacting to these U.S. tariffs and pressures? Are they uniting against it, or is it more fragmented?
It's a mixed bag, really, showing both pushback and a desire for de-escalation. Brazil's President Lula has called for a virtual BRICS meeting on September 8th, specifically to discuss U.S. tariffs. That signals a potential coordinated response from that bloc: Russia, India, China, South Africa.
A potential counterweight.
Exactly. But in stark contrast, you have EU Council President Costa emphasizing diplomacy over escalation with Washington, clearly indicating a desire to de-escalate to avoid a transatlantic trade war.
Interesting difference in approach. And what about trade developments in Asia, Japan, India?
In Asia, Japan denied agreeing to cut farm tariffs in talks with the U.S. They stress there's no gap in understanding on the broader trade deal, but it suggests specific sensitive areas like agriculture are still, well, contentious. Meanwhile, India's trade minister confirmed discussions are underway on a bilateral trade agreement with Washington.
Okay.
So it shows a very active and varied global trade environment. Resistance here, cooperation there, ongoing complex negotiations everywhere. It's constantly shifting.
So for those of you maybe managing global portfolios or just wondering about the price of goods, what's the key signal these trade talks and tensions are sending about the global economy?
Well, these discussions on tariffs and trade deals directly influence global supply chains, production costs, and ultimately, yes, consumer prices. They're also shaping international alliances and can signal these profound shifts towards protectionism or perhaps new kinds of trade agreements, which have enormous implications for global growth and stability. For instance, the BRICS nations discussing a coordinated response isn't just talk. It could signal the emergence of alternative trade frameworks, potentially challenging the existing order.
Right. Let's move to the core of global stability, geopolitics. This is where it gets really pivotal. Our briefing notes continued volatility in the Middle East. What are the key developments keeping the region on edge?
Well, reports suggest Israel's prime minister is holding discussions on potential full control of the West Bank and measures against the Palestinian Authority. Concurrently, heavy explosions are reported in Gaza City. These are incredibly sensitive and, frankly, escalating situations. And adding another layer of uncertainty, Iran's foreign ministry stated it hasn't yet decided whether to continue negotiations with the IAEA, the International Atomic Energy Agency. That keeps the nuclear issue very much alive and uncertain. These are all interconnected threads contributing to regional instability and, global anxiety, which feeds back into things like commodity prices, as we discussed.
Turning to Europe's east, Russian President Vladimir Putin has been vocal on Ukraine. What's his latest stance, and how should we interpret it?
Putin insisted that a sustainable settlement in Ukraine must address what he called the root causes of the conflict. He also reiterated opposition to Ukraine's NATO membership, and he explicitly stated Russia has no intention of attacking Europe, dismissing claims otherwise as provocation or incompetence.
Right. A significant claim, but needs context.
Absolutely. It's important to understand this as the narrative push from Moscow. Trying to frame its actions, reassure some audiences maybe, but it has to be viewed against the backdrop of the ongoing war in Ukraine and heightened tensions with the West.
Of course. And how are Western leaders responding? Are we seeing unity or perhaps fatigue setting in regarding Ukraine?
We're seeing a mix, I'd say, both steadfast resolve and a kind of pragmatic acknowledgement of how challenging the conflict is. French President Macron confirmed preparations for an Alliance of the Willing meeting in Paris later this week. That's to define stronger security guarantees for Ukraine, a proactive push. NATO Secretary General Ruth stressed the alliance takes the jamming of GPS signals very seriously, indicating deep concerns about electronic warfare, potential spillover. Finland's president, however, offered a more sobering assessment, noting some progress on security guarantees, but warning that a ceasefire or peace framework, that remains unlikely in the near term, underscoring just how protracted this is.
A difficult reality check. Finally, our briefing touches on key diplomatic alignments, specifically involving China. What stands out to you there? What are the implications?
Well, Chinese President Xi Jinping recently met with Putin. They affirmed what they called an unprecedented level of strategic ties between their countries.
A very clear signal.
A very clear and deliberate signal, yes. Deepening that Beijing-Moscow axis, solidifying a significant counterweight to Western alliances. And separately, reports noted North Korea's Kim Jong-un traveled to China ahead of Beijing's Victory Day parade, further highlighting these strong and strengthening alliances among these nations.
So these aren't just photo ops.
Not at all. These engagements have profound implications for global power dynamics. They challenge the sort of unipolar moment we perhaps saw after the Cold War and could really shape future international cooperation, or indeed, conflict.
So pulling it all together for our listeners, what does this all mean for you? How do these geopolitical developments ripple across the world, affecting markets, policy, even just the daily news feed?
Yeah, these developments are far from isolated incidents. They directly influence global economic stability, trade relations, the risk assessments that investors and whole nations make constantly. They fundamentally shape the future of international cooperation, how conflicts might be resolved, and the very structure of global power. So for you, the listener, understanding these intricate connections helps you decode the daily news, anticipate potential impacts on maybe your investments or your business, and just grasp the bigger picture of where the world seems to be heading. These aren't just headlines, they're signposts.
Absolutely. So what does this all mean? We've taken this deep dive into the latest global market and geopolitical briefing, and it's clearer than ever that everything truly is interconnected. From the surprising stability of the dollar and the puzzling euro to the price of crude oil, and from escalating trade tariffs to that delicate balance of power in global hotspots.
Indeed. This snapshot really vividly illustrates that financial markets aren't just numbers on a screen. They are sensitive barometers of incredibly complex geopolitical forces, diplomatic maneuvers, underlying societal pressures, the works. Understanding these connections helps you, our listener, see the world with hopefully greater clarity, appreciate the ripple effects of seemingly distant events, and, frankly, makes you a more informed global citizen.
It's a lot to take in, but incredibly rewarding to explore, isn't it? Thank you so much for joining us on this deep dive. We hope you feel a little more well-informed and maybe a lot more curious about how these forces shape our world.
And here's a thought for you to perhaps mull over. Given this confluence of a strengthening dollar, rising commodity prices driven by persistent conflict, and the formation of these new, powerful trade and geopolitical alliances, like that Beijing-Moscow axis we discussed, how might these trends collectively reshape the global economic order and the balance of international power, say, in the coming 5 to 10 years? What might that actually look like for global trade routes, for investment flows, even for the everyday products we all consume? Something to think about.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.